We're here, as always, to cut through the complexity and give you the essential insights from corporate reports. Today, we're tackling Forte Teknoloji, Technology HubNot. You probably know them as Forte on the Bourse Istanbul. We're looking at their 9-month 2025 consolidated results.
And this one's really worth unpacking. Forte isn't simple. It's evolving fast, multiple sectors.
Yeah.
We really need to figure out what's behind that massive jump in net profit they reported, and crucially, where the risks might be hiding.
Definitely. And before we even touch a number, there's something absolutely critical we need to establish.
Yeah.
Context.
Right.
Everything we're talking about today, every single figure, is based on inflation-adjusted accounting, TMS 29.
Yes, absolutely key. If you miss that, you'll completely misread the situation. Comparing 2025 numbers to 2024 without adjusting for the high inflation, it's meaningless.
So when we say flat revenue, we mean flat in real terms, after accounting for inflation eroding the currency's value.
Exactly. It lets us compare apples to apples, operationally speaking, across the two periods.
Okay, so let's get into Forte itself. The parent company is based in Ankara, right? Teknoloji.
Yep, that's their HQ. IT, software, R&D focused there. And defense, of course. They've been listed since June 2023.
But they're much more than just that parent company now. They've built this group structure. Can you walk us through the key pieces?
Yeah, it's become quite a diverse group. It seems very deliberate, aiming for, integration and spreading risk.
Let's start with the biggest move recently, the one that really shifted things.
That has to be MilSOFT. They bought 100% of MilSOFT Teknoloji back in July 2025.
Okay.
And look, this wasn't just buying another company. This was like injecting serious high-level capabilities straight into the group.
How so? What did MilSOFT bring specifically?
Two main things. First, CMMI Level 5 certification for software development. That's the highest possible level. It signals extremely reliable, mature processes.
Wow. Okay, so that's a huge quality stamp.
Huge. And second, deep expertise in defense systems, especially C4ISR. That's, command, control, communications, computers, intelligence, surveillance, and reconnaissance. The complex stuff.
So buying MilSOFT basically vaulted them into the top league for defense software overnight. That CMMI Level 5 alone is a massive competitive advantage, right? It opens doors to the biggest projects.
Precisely. It's a huge barrier to entry for others. It practically guarantees them a seat at the table for major government and military contracts.
And that ties into another piece of the puzzle, doesn't it? ELD Bilishim.
Right, ELD Bilishim. Also 100% owned. They handle ILS integrated logistics support.
Okay, ILS. What's that in simple terms?
Think of it as the whole support system for big, complex equipment, keeping things running long term. Spare parts management, maintenance planning, technical documentation, training.
Oh.
The works.
Like what they're doing for the Altay Tank project. That's a flagship program.
Exactly. That kind of ILS work means long-term, steady revenue tied to really critical defense assets. Very sticky business.
Okay, so far we have high-end defense software and mission-critical logistics support.
Yeah.
Makes sense? But then the strategy takes a turn.
Well, a turn.
Yeah, this is where it gets interesting. Setwell. Forte owns 51% of this one.
And Setwell does.
Agritech, modern agriculture technology. Yeah. They build and operate these large-scale, high-tech greenhouses.
Oh, hang on. We were just talking C4ISR and tanks. Now we're talking about high-tech greenhouses. Farming. Like strawberries and avocados in Cyprus.
I know, it sounds like a total pivot, right? But think about it.
Okay.
Partly it's diversification, spreading risk beyond just defense contracts, but also running a sophisticated automated greenhouse involves complex control systems, data management, process optimization.
Ah, I see. Areas where a company with CMMI Level 5 software skills might actually have an edge.
Exactly. It's applying their core tech know-how to a different, potentially high-growth, high-margin sector that isn't tied to government budgets in the same way.
That does reframe things. They're not just a defense contractor or an IT firm. They're building this broader technology and investment platform. You nailed it. And speaking of investment, they're setting up their own funding arms, too.
Right, I saw that. Forte Teknoloji.
Yeah, for crowdfunding tech startups. And they're planning to launch 2 GSYF's venture capital investment funds called Fontro and Schillick GSYFs, likely kicking off in 2026.
So they want to be involved in financing the next generation of tech, too, covering the whole life cycle.
Seems like it. Builder, operator, and financier. It's ambitious.
Okay, let's talk about who's running the show. Ownership, governance.
The ownership's pretty concentrated among the founders. Elisa Lal Asselturk has about 28%, Hassan Cengiz Bayrak, 24%, Ebubekir Balıkçı 15%.
So what does that leave for the public float?
Around 33%. But here's a key detail for investors. The voting rights. The A group shares, held mainly by insiders, get 5 votes each. The B group shares, the ones publicly traded, get just 1 vote.
Ah, okay. So control remains firmly with the founding group, even with a third of the shares floated. That's important to know.
Definitely. In terms of organization size, they've got 7 domestic branches, the R&D hub at Technokent, plus that European sales office, Forbes BV in the Netherlands.
And headcount.
As of June 30th, 2025, the whole group employed around 375 people.
Any notes on diversity in leadership?
Yeah, it's mentioned. Asliz Özguldur is the deputy GM for financial management, and she and Melis Akin are on board committees. So there is female representation at the executive and governance levels.
And what about executive pay? With all this expansion and acquisition, did their compensation skyrocket?
Actually, not really. For the first 9 months of 2025, total benefits paid to top execs came in at 18.8 million TL. That's up from 17.0 million TL in the same period last year.
So a modest increase. Kind of tracks with inflation, maybe a bit more, but not some huge jump despite the MilSOFT deal.
Yeah, seems reasonably controlled considering the scale of change.
All right, we've got the structure, the strategy, the players. Let's dive into the financials. How are these big projects and acquisitions actually hitting the income statement? Let's start at the top. Revenue or zero?
Okay. Revenue for the first 9 months of 2025 was 1.1135 billion TL.
And compared to last year?
Virtually identical. It was 1.1134 billion TL for the same period in 2024. Essentially flat.
Hold on. Flat. After buying MilSOFT, a major defense player, in July, even adjusted for inflation, wouldn't you expect a noticeable bump? That feels counterintuitive.
It does, and this is probably the first big flag for you to really consider. Remember, TMS 29 adjustment means flat revenue implies their actual sales volume just kept pace with very high inflation.
Okay.
MilSOFT's contribution was only for about 2 months of this 9-month period, and defense contracts often have long revenue recognition cycles.
Still, you'd expect something more immediate from such a big acquisition, wouldn't you? It puts a lot of pressure on their costs if the top line isn't growing in real terms.
Exactly, which makes the next line item even more interesting. Gross profit or brute CAR?
And how did that look?
Much better. It jumped significantly from 139.3 million TL last year to 193.9 million TL this year.
Okay, so flat revenue but higher gross profit. What does that tell us?
It suggests they're either improving their margins, maybe shifting to more profitable software and services from MilSOFT, or they're getting much better at controlling the direct costs of delivering those services. Either way, it's a positive sign operationally.
But when we get down to core operating profit, Isas Faliet Kari, they're still in the red, operationally speaking.
They are, yes. But the loss narrowed quite a bit. It went from a 32.8 million TL loss last year down to a 13.2 million TL loss this year.
So getting closer to break even on core operations, but not quite there. Why?
Well, think about it. High growth phase, major integration effort with MilSOFT, plus continued R&D spending. They spent 5.1 million TL on R&D in these 9 months. That plus higher admin costs for managing this bigger, more complex group. It adds up. It's sort of typical for a tech company in heavy investment mode.
Okay. Now for the number that everyone was talking about, the bottom line, net profit.
Yes. The headline grabber.
From a loss of 169.1 million TL in 9M 2024
So,
to a profit of, wait for it, 1.797 billion TL in 9M 2025.
yeah. Quite the swing.
What on earth happened? Is that real cash flooding in or is something else going on?
It's mostly the something else. It's primarily driven by accounting, specifically yatırım faaliyetlerinin jeweler income from investment activities.
How much was that?
A massive 2.088 billion TL.
Okay, let me get this straight. Their day-to-day operations lost 13 million TL, but their investment activities generated over 2 billion TL in income.
Right.
What is that investment income exactly?
It's largely the non-cash accounting impact of the MilSOFT acquisition combined with those mandatory TMS 29 inflation adjustments on the assets they acquired.
Explain that a bit more.
When Forte bought MilSOFT, they had to value MilSOFT's assets, including intangible ones like software, brand value, customer relationships, what we call goodwill. Under inflation accounting, these values get adjusted, and the change, especially the gain from the business combination itself, flows through the income statement as a profit.
So it's a paper profit. It reflects the increased value and strategic importance brought by MilSOFT onto their books, boosted by inflation adjustments. But it's not cash earned from selling more stuff day to day.
Exactly. It's a legitimate accounting game reflecting the strategic shift, But it's crucial you understand, it's not from core operational improvement in this period. It led to that huge earnings per share number 26.83 TL, up from a loss last year. Great for headlines, but needs context.
Okay, that makes sense. Let's pivot to the balance sheet then, because that MilSOFT deal must have completely reshaped it. Assets are way up, right?
Oh yeah. Total assets jumped to 4.69 billion TL, and equity doubled to 1.94 billion TL.
Where did most of that asset growth land? Intangibles.
Bingo. Mario Mayan Duran Verlickler. Intangible assets leaped from about 400 million TL to nearly 2.7 billion TL. That's where you see the recorded value of MilSoft's software, that CMMI certification, the goodwill.
That's the asset side reflecting the acquisition. Now, the other side of the coin? Liabilities. I saw something pretty alarming there. Short-term borrowings.
Ah, yes. This is, I think, the key risk factor investors need to focus on right now. Kazsavedeli Borslanalar short-term borrowings.
How bad was the jump?
It wasn't just a jump, it was an explosion. They went from only 676,000 TL at the end of 2024 to 1.308 billion TL by the end of September 2025.
Wow. From practically zero short-term debt to over 1.3 billion lira. That's incredibly fast. Where did that come from? Financing the MilSOFT deal. Working capital for big projects.
It has to be a combination of both. Financing a large acquisition like MilSOFT often requires bridge loans, and big defense projects can require significant upfront working capital before payments come in. But relying so heavily on short-term debt, that's risky.
Extremely risky. It exposes them hugely to interest rate fluctuations and refinancing pressure. What does that leave their net debt position looking like?
If you net out their cash, their net debt is roughly around 1.19 billion TL. That's the financial weight they've taken on to fuel this strategic expansion.
Okay, that level of debt makes the cash flow statement absolutely critical. Is the underlying business actually generating enough cash to handle this?
And here's the good news, the counterbalance to the debt worry. The cash flow statement looks much healthier. Net cash flow from operations Faliatlerden Elda Edelen Net Nakit Akushlera showed a massive improvement.
How massive?
It soared to 282.2 million TL generated in these 9 months. Compare that to just 3 million TL in the same period last year.
Okay, that's significant. So even if the operating profit is slightly negative, the actual cash being generated by the core business activities is strong and growing rapidly. That's the cash that can eventually pay down that debt.
Precisely. It shows the operations are fundamentally healthy from a cash perspective. And another positive sign on that front is Ertelen Mishgullerler, or deferred revenue.
That's money received for work not yet done.
Exactly. It's up significantly, totaling around 332.8 million TL. That's basically guaranteed future revenue from existing contracts, which provides a nice cushion for cash flow planning.
And we also saw they're already taking steps to address that big short-term debt pile, right? Applying to issue bonds.
Yes, post-period end, in October, they applied to issue up to 1 billion TL in bonds to qualified investors.
So trying to swap out that risky short-term bank debt for potentially longer-term, more stable bond financing. Makes sense.
It's a necessary move to de-risk the balance sheet after such a big debt-funded acquisition. It shows management is aware of the pressure and acting on it. We also saw continued investment, a 266.5 million TL cash outflow for buying fixed and intangible assets, likely tied to things like that TSK cloud project infrastructure.
Okay, let's try to pull this all together. We've got the complex group structure, the big strategic moves like MilSOFT and Agritech, the headline profit jump driven by accounting, the worrying debt spike, but also the strong operating cash flow. What's the bottom line for an individual investor looking at Forte?
I think you have to see it as a company in the midst of a really ambitious, high-stakes transformation. They've successfully bought their way into the top tier of defense tech with MilSOFT. They've secured significant future revenue streams, diversified into agritech.
And management seems committed to growth, right? R&D, those new venture funds, even sustainability talk with solar projects and planning an electric vehicle fleet.
Right. They have a clear vision for growth and becoming a bigger regional player. But
the financial reality underpinning that vision is complex. That huge net profit isn't from core operations yet. Top-line revenue is basically flat after inflation, and they are now carrying a very significant amount of short-term debt.
that's the core tension, exactly. The strategy looks smart, potentially brilliant. Operating cash flow improvement is real and encouraging, but the leverage is high, and the risk profile has definitely increased in the short term.
So the final thought we want to leave you with is really a question about timing and execution. 4K has laid the groundwork strategically to become this multifaceted technology group. Defense, IT, agritech, even finance.
Mm-hmm.
They paid for that speed and ambition with over £1 billion in short-term borrowings. The critical question for the coming quarters isn't if the strategy is good on paper. It's whether those core operations, particularly the high-margin MilSOFT business, can ramp up revenue fast enough.
Right. Can they accelerate real inflation-adjusted sales growth? Can they turn that strong operating cash flow into consistent core operating profit?
Because that's what they'll need to comfortably manage this new, much higher level of debt long term. If they can make that happen, the strategic bet could pay off massively.
But if that core revenue growth lags, or if costs get out of control while integrating everything, that debt load could become a serious problem. That's the key thing to watch.